Welcome to another program of Centrally Speaking,
the program that opens up the conversation around important matters of economics and finance, matters of national importance that have an impact on your life. Hi, I'm Anna.
And I'm Sheena.
We have two special guests from the Jamaica Mortgage Bank, JMB. With us are the Jamaica Mortgage Bank's General Manager, Courtney Wynter, and Patricia Burke, Director of Business Operations.
But as always, before we hear from our friends at the Jamaica Mortgage Bank, we want to hear from you in the streets. It's time for Street Check.
What is a mortgage?
A mortgage is, let us say, for example, practically speaking, you're buying a property. You take a mortgage out to pay, and you haven't got the full cost of the property. You take a mortgage out from the building society or the bank or the money lender, and that money will be used to pay for the property that you're buying.
It's really a loan, really, that is taken out on your house. So the bank will own your house. So when you pay off that money now, then the house belongs to you. So it's really a loan, the mortgage is really a loan.
A mortgage is a loan that you pay monthly.
A mortgage is a financing tool that you can take with any financial institution to purchase a home or land or something in that real estate department.
It's a loan given to you by a bank to buy a house that you pay back.
A mortgage is basically a loan you take out for a house, basically. So, and you pay it over time, just like any other loan.
To the people in the streets know the thing, man, and it's a good thing. We have more information to share about mortgages.
Right. Our guests now are Courtney Wynter, General Manager at the Jamaica Mortgage Bank, and Patricia Burke, Director of Business Operations. Courtney, Patricia, welcome to the program.
Welcome.
Thank you, Anna, Sheena. Thanks for having me. Thanks for having us.
Thank you
Great.
so much for having us today.
So set the stage for us, Courtney. Perhaps a lot of our viewers are not familiar with the Jamaica Mortgage Bank. What does it do? When was it established? What is its mandate?
Thanks, Anna. The Jamaica Mortgage Bank is actually one of the biggest secrets in Jamaica. It was established actually in 1971 as a limited liability company and subsequently converted in 1973 to a statutory body.
Okay.
In fact, in 2021, we celebrated our 50th anniversary. I always joke around, to say before there was an NHT, the Jamaica Mortgage Bank was facilitating housing in Jamaica. Our main objective is really to facilitate the development of housing island-wide. And we do that through the mobilization of loan funds, which we unlend to developers or other lending institutions who operate in the primary and the secondary mortgage market. Additionally, we also administer on behalf of the government of Jamaica the Mortgage Indemnity Insurance Plan, which came about by the Mortgage Insurance Act of 1960. We also offer some other services where, for example, we leverage our 50 years of experience in monitoring construction. So we offer that kind of service through what we call the TSS, the Technical Support Services, to lenders of mortgages for development purposes. As well as we have a service called the Diaspora Home Building Services as well.
All right, so just to pick up on a point you made regarding JMB being established before the NHT. So what is the difference between the Jamaica Mortgage Bank and the NHT National Housing Trust?
The primary difference is that the NHT was established to provide a benefit to their contributors. The Jamaica Mortgage Bank's primary role is to mobilize loan funds to then unlend to developers of housing. So we finance on an interim basis housing developments in Jamaica.
Share with us, how is the JMB funded? That's one. And explain for us and our viewers, what is the primary mortgage market?
The Jamaica Mortgage Bank is a self-funded statutory body, as I said before. And what that really means is that we do not receive any funding whatsoever from the government, the central government, or from taxpayers' money.
Okay.
However, we employ the same business model for each of the markets that we operate. By going to the market, the financial markets, we borrow funds on a concessionary basis or a concessionary rate. We then apply a small margin to that and on-lend those funds to developers or others in the other lending institutions for the development of housing or commercial.
Okay.
In respect to the primary market, it is simply providing either interim or short-term funding for construction or infrastructure development.
Okay.
So Patricia, my question is for you. I was listening to Courtney very carefully when he made a distinction that the Jamaica Mortgage Bank, it lends to developers, all right, on the primary mortgage market. Can you explain for us what is a primary market?
Well, how we operate within the primary market, is that we provide interim construction financing to private developers who are interested in building out housing-related units. So we do service lots. We actually do residential developments as well as commercial developments. So private developers would come to the Jamaica Mortgage Bank if they need financing for their projects. And then based on assessment, we would review, and if so minded, we would on-lend to them to facilitate the development of these houses. And when these houses are sold, then in turn, the bank is repaid.
So just to be clear, so the Jamaica Mortgage Bank is just an option that developers can go to because they also go to commercial banks. So it's another option.
Right.
Okay, great.
And what we have found over our 52 years is that the Jamaica Mortgage Bank is the preferred institution when it comes to interim construction financing. We have demonstrated over the years our technical competence within the area. So we are not just the typical lending institution that focuses only on the returns, but we also assess the technical feasibility of the project, and that's a competitive advantage for the Jamaica Mortgage Bank. So you'll find that many first-time developers, female developers, would come to us, small developers, who in turn turn out to be large developers, actually started with the Jamaica Mortgage Bank.
So on that note, tell us some of the projects, Patricia, that you have financed.
So we have financed a lot of these projects within Portmore that we are accustomed to. When we started in the 70s, we actually built out Portmore.
Okay.
So many of the schemes in Portmore, we actually financed those projects. Yes. Yeah. So think about all of those communities in Portmore, and we have done it. The Edgewaters, the Portsmouth, different communities within that space. In Kingston, you'd be familiar with Long Mountain Country Club.
Oh, yes.
There's Corville Gardens. There's Laventura on the Washington Boulevard. In the expanse to Westmoreland, we have Little Bay Country Club. We have done service lots in St. Thomas called Sunrise Manor. Different complexes all across the region. Just last week, we were able to open a 96-unit development on Deanery Road with the Prime Minister. And you would know that that is part of our mandate. We help to re-gentrify different areas. And within that space, where some financial institutions may shy away from it, we do the feasibility analysis. And based on that, we were able to do this very nice complex on Deanery Road. And if you drive across Kingston, you'll see several projects that are financed by the Jamaica Mortgage Bank.
We also funded the 138 student living.
On campus.
Yes.
On UWI campus. The state-of-the-art dorms that are currently now 138 student living. And that was when a lot of financial institutions did not want to touch that project. In fact, I don't think they understood it. The mortgage bank, being the innovators that we are, took on that project.
I like that.
And it is now benefiting the students up by UWI.
You intimated it just now, referencing the Jamaica Mortgage Bank's expertise, but really share the behind the scenes. How are you able to attract developers?
Our brand is well recognized within the construction space, and that is by virtue of just our repeat customers talking about the value that they would have gained from doing business with us.
Okay.
So not only do we approve interim construction financing, we actually have a monitoring mechanism where our technical officers actually go to the sites and provide supervision. So that helps with the bank's risk mitigation. So it's not just dispersing money. It's also monitoring to ensure that the building codes are being adhered to. Quality is of the highest level and standard. So that is what we do that most other institutions within this space does not do.
In the words of our guest, Courtney Wynter, we are learning about Jamaica's biggest secret, the Jamaica Mortgage Bank. You're watching Centrally Speaking. We'll be right back after this break.
Welcome back to Centrally Speaking. We have been learning about the work of the Jamaica Mortgage Bank. We have with us Courtney Wynter, General Manager at the Jamaica Mortgage Bank, and Patricia Burke, Director of Business Operations. So now, Courtney, so we've learned all about the primary mortgage market.
Yes.
Tell us a little bit about the secondary mortgage market.
Even although the secondary mortgage market is not novel,
Yes.
it really is the buying of mortgages
Right.
and the securitization of those mortgages, or the packaging of those mortgages to be sold in the capital markets. So let me break that down. There are actually about 3 actors in the secondary mortgage market. Firstly, there is what is called a mortgage originator. And these are institutions or persons who create these loans. So your financial institution will lend you funds to buy a home, and it's called a mortgage. They put it on their balance sheet as a mortgage receivable. You then have what is called the mortgage aggregator, which are usually security dealers or brokers. The Jamaica Mortgage Bank could also be classified in this area. And the aggregator really buys these mortgage receivables from the commercial banks, and they package it into securities.
Oh,
In the case of residential, it's called a residential mortgage-backed securities.
okay.
These securities are then sold to the third actor, which are the investors. And these investors could be pension funds, they could be insurance companies, or even hedge funds.
Okay.
Now, this is perfect because, as you know, mortgage receivables are long-term assets ranging from about 15 to 30 years. So you tie up these assets on your balance sheet versus packaging it and sell it to folks who have the same kind of durations, namely pension funds. So it's a perfect match. But
Okay.
most importantly, it provides the kind of needed liquidity to the financial institutions to continue to lend mortgages.
So just to follow up on that, there's the mortgage banks, the Jamaica Mortgage Bank's operations in the secondary market impact home ownership.
We employ a slightly different modality to what I just described, or the conventional way of operating in the secondary mortgage market. The Jamaica Mortgage Bank actually takes those funds that we raise, and we provide a pool of funds to primarily the credit unions.
Okay.
As you may be aware, the credit unions have a profile of membership that may not necessarily contribute to the NHT, so they're not able to get a benefit. So by providing this pool of funds to the credit union, they then unlend to their members for home ownership. We then come behind that and we package those mortgages and we sell them to investors. And in this case, primarily the building societies. And again, that is a tool that is used to recycle these funds so that the credit unions again can go back and lend, continue to lend mortgages. In terms of identifiable impact, if you recall, in about 2010, 2011, mortgage interest rates were about 13 to 18%. You may also recall a particular credit union who announced an interest rate that tied into Usain Bolt's record of 9.58 at the time when interest rates were averaging about 13 to 18%. Another credit union followed soon after with a 9% refi of mortgages.
Refinancing.
Yes.
That was as a direct intervention of the Jamaica Mortgage Bank, providing this pool of funds so they could offer these kind of rates. That was the start of the deceleration of mortgage rates in the market.
So thank you for that, Courtney. Patricia, I have a question for you. Tell us, what is mortgage indemnity insurance and how does it work?
All right, so mortgage indemnity insurance is a default risk insurance offered by the government of Jamaica,
Yes.
but administered by the Jamaica Mortgage Bank. Now, with this insurance, it provides a guarantee or it allows financiers to use a higher value of your property as collateral.
Right.
It gives them a sense of comfort because of this default risk insurance. So, for example, whereas institutions may be comfortable in using up to 90% of the value of the security, with mortgage indemnity, they can go up to 97%.
Okay.
Now, when they accept that higher risk, it is backed by mortgage indemnity insurance.
Okay.
So that's how it operates generally.
Thank you.
All right, so for the small people like me, you know, me not develop on them someday. So how does mortgage indemnity insurance benefit me?
All right, so it means that when you go to your mortgage company to negotiate a residential mortgage, you can ask for MII.
Okay.
Now, typically, 5 to 10% would be required as a deposit. But with MII, you can deposit as low as 3%. Because the bank will then accept a risk of 97%, which would cover your mortgage. So let's use an example. If you were purchasing a property for, say, $10 million, if the deposit was 10%, you'd be required to come up front with $1 million.
Okay.
But with a 3% deposit, only $300,000 would be required because the bank would then lend you $9.7 million to cover the cost. So the benefit is that lower deposit because it's as low as 3% for the purchaser.
Right.
For the lender, it means that they can lend a little more, which adds to their loan stock and increase their loan value. It also facilitates earlier home ownership because using the example earlier, rather than you saving to $1 million for that $10 million property, all you need is $300,000.
Okay.
So those are some of the benefits of having MII Plus because of the default risk comfort to the financial institution, the lending institution. Then they are able to take more risk. Yeah.
Okay. So Courtney, in your capacity as General Manager for JMB, you outlined earlier that it is self-financing. Talk to us about the performance of it. Is it doing okay?
For the last 50 years, we have been facilitating home ownership for Jamaicans.
Yes.
I would say in the last 7 to 10 years, we have done extremely well. We have increased our output.
Yes.
In the last 7 to 10 years, we have done about 80 to 90 projects across the length and breadth of Jamaica.
Right.
And that has also resulted in an increase of our financials as well. So our output has increased by about 350%.
Right.
Our numbers in terms of our profits, about 300%.
Wow.
Our bad debt or non-performing loans are at about 3.8%. That compare with an average of about 5%. So we're a little below market. And, we continue to, in fact, the 7 of the 12 projects that we're now under management at the mortgage bank, we started during the COVID period, in the middle of COVID. And that is when, financial institutions restrict credit because of this kind of global shock. The Jamaica Mortgage Bank made a decision then that we will try to keep and hold up the market by continuing to offer commitments and credit. Those projects are successful, and we are beginning to see the completion of those projects. So the mortgage bank is doing well, and I should take this opportunity to credit the amazing staff. We are only 28 strong.
Really?
And people will never believe what we do with those kind of numbers, resource numbers. But we have very committed staff, very innovative. We will continue for the next 50 years with the kind of experience that we have within the Jamaica Mortgage Bank.
Excellent. So, JMB staff, you heard it. Big up yourself.
All right, Courtney, I have a question for you about where the Jamaica Mortgage Bank goes from here.
The Jamaica Mortgage Bank, as I mentioned, we have done very well in terms of our mandate for the last 50 years. We would like to use the next 50 years to continue to facilitate home ownership for Jamaica, but probably to do a little more in the segment of the market where we have the most effective demand. This is where we will provide most type of housing solutions for Jamaicans in the middle or the low middle income area. However, we think that we are best suited to do that as a private entity. And so the government has made a decision to privatize the Jamaica Mortgage Bank. So we will go into the next 50 years with the same legacy as the past 50 years, but as a private entity.
So, Courtney, with all the successes that you've just outlined, why would you be privatizing at this time?
The government, in trying to manage its spending in terms of debt, would put these kind of
Caps.
Restrictions on how much you can lend. The second reason is really the dynamics of the market and the borrowing, the financial market, and the way we can borrow. I had mentioned earlier that we borrow at concessionary rates.
Right.
With the advent of going to the IMF and so forth, those concessions go away. And so we have to leverage away from the low income type housing units into the middle and even the upper market. Now, the government's policy is to focus on low income houses.
Right.
And so they think that it is best, and we agree that we're best suited in the private market. And so in the next year or so, we should expect the Jamaica Mortgage Bank, through an IPO modality on the main market, to become a private entity.
Yeah. What does the foreseeable future look like after privatization?
As I mentioned before, we'll be a private entity offering the same type of service in the primary market, and hopefully to do a little more in the secondary mortgage market. We also have some plans for some apps that we think will be extremely beneficial in the mortgage space. We want to be perhaps one of the first entities to be a real broker in the secondary mortgage market. If you can imagine, we have probably about $900 billion of mortgage across the board, all the financial institutions. We also have significant liability on the pension side. As a broker, if we can bring both parties together to continue to provide that type of liquidity to the market for development as well as mortgages. There are some other plans that I probably can't fully disclose here.
Yes.
But we think that the Jamaica Mortgage Bank will take off and provide and create wealth for the 60% of the public that will participate in our IPO.
All right, so Courtney and Patricia, thank you so much for this very, very, very insightful conversation.
Yes.
We have been speaking with Courtney Wynter, General Manager, and Patricia Burke, Director of Business Operations, both of the Jamaica Mortgage Bank. So stay with us. Centrally Speaking, we'll be right back after this break.
Today, we learned about the work of Jamaica Mortgage Bank. Here's a recap of some of the main points from the discussion. It's time for our fast facts. Number 1, the Jamaica Mortgage Bank was established in 1971 as a limited liability company and was subsequently converted to a statutory body by the JMB Act in 1973. Therefore, it operates using its own financial resources and not from taxes or government funds. Number 2, the main objective of the bank is to facilitate the development of housing in Jamaica by providing loans to developers and to other lending institutions. Number 3, Jamaica Mortgage Bank provides a pool of funds to credit unions who then on-lend to their members for home ownership. The JMB then packages and sells these mortgages to investors, primarily building societies. Number 4, Jamaica Mortgage Bank attracts developers as a preferred lender, not only due to its expertise in structuring loans, but also in the technical aspects of the project and site management. Their understanding of the development process is their competitive advantage. And number 5, the Jamaica Mortgage Bank will privatize through an initial public offering, IPO, where 60% of shares will be offered to the public. And that's it for this week. Your Fast Facts. Unfortunately, that's our program for this week.
All right. So follow us on X and Facebook at Central Bank JA, at Central Bank Jamaica on Instagram, and on BOJ's YouTube channel. You can also visit our website at www.boj.org.jm.
Hey, I want to go fight in a comment. So questions coming in on X or on Facebook, remember to send them in.
And of course, tune in again to Centrally Speaking next week at the same time right here on your station when we will have another special guest. I'm Sheena.
And I'm Adam.
Thanks for watching.
See you next week.
Centrally Speaking is a production of Bank of Jamaica.